Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of the S&P 500, ticker symbol SPX. And so here we are looking at it on the daily time frame on Sunday, March 31st, having closed on Thursday, March 28th at a price of $5,254.35, being up 0.11% on the day, approximately flat. And so looking at the chart here, I just wanted to go over a few reasons why I think it might be a good time, or it might soon be a good time to short the market. And I must say that this is probably early. When bubbles expand, it takes a little while before they burst. And so, I do suspect that it might still be a couple more months before we do see a turnaround or a correction. But yeah, I just wanted to go over some things that do stand out to me on the chart based on some of these trend lines that I do have drawn up here. And so as you can see in these two white lines, I do have this rising wedge that we've been in for quite some time. And I really just wanted to go over the bottom portion of that. As you can see here, these two pivot points, one being based on the low of October 27th, also the yellow line having the same pivot point down there, October 27th. And then the low from, let's see, January 17th. So that is the other pivot point for the white line. And as you can see, we have been breaking lower than that. So that is why I added the yellow line, bypassing this pivot point here, going to the low hit on February 21st. And so that is how I get that line there. And so I think that just gives us a little bit more wiggle room to kind of identify when we do start to see a breakdown. So if I do zoom in on the chart here, we can see that we've had a number of wicks and actually opens and closes below this white uptrending line here at the base of that wedge. And we have more recently started to see multiple closes below that line. You can see one here, although it is quite possible, this line could be adjusted and then this close would actually be inside of it. So, I do think that there's some wiggle room here. But what we have seen more recently, very clearly, two closes well below that line. As the price has been moving up, this wedge has been getting more and more narrow. And so not only did we see a close below that line, we also saw a bearish engulfing candle following that day. So on March 25th, the next trading day being the 26th, see this bearish engulfing candle closing lower than the previous day's low on that yellow line. And we have seen things like this before with this candle here closing below that white line, getting another close below that low, that previous day's low. So it has been progressively getting weaker. And so right now we are trading below that white uptrending line. It is quite possible that we will be continuing higher, as we did hit an all-time high just about $10 above the closing price from Thursday. And so I do think that we could be moving higher into next week, perhaps the week after that as well. But it does look like we may be forming a double top, and we have been, seeing a number of closes now below this white uptrending line. And so I do suspect that this will be breaking, but we could be residing above this yellow uptrending line as we do continue to move higher before we start to break down. And so I would really just look for closes above Thursday's high, which was $5,264.85. If we do get closes above that level, that could be negating any downside signals, any bearish signals. But I do think eventually this will turn around, and we do have this gap to the downside right around $5,000 a share. And we have a number of other gaps to the downside that do need to be filled. Quite possible they will be filled later this year. So, it might be a good time to start shorting the market. And one of the things that I have been looking at has been semiconductors. So over here, I'm looking at a semiconductor ETF, ticker symbol SMH. And so one thing that we can see here is on March 8th, we did hit an all-time high of $239.14, but on that day we also formed this bearish engulfing candle, actually engulfing the two previous days' candles, and then we did start to consolidate to the downside, which then broke with a gap to the upside, consolidating more to the downside. So I do suspect we will see another break to the upside, but it is quite possible we have formed a top and we may be bumping into resistance there, creating a double top before semiconductors do turn around. And so the closing price on Thursday for SMH was at $224.99, also being about flat on the day, just like the SPX. And so what I could see happening with this is it moving back up to $239, $240, right around there. And I do think that could be a double top before this does pull back. So something to keep in mind. And in order to short this, one way of doing that is with the 3x leveraged short semiconductor ETF, ticker symbol SOXS. And so here, looking at this, we can see where price currently is at $3.21 as of the close on Thursday. And the previous low that we did see with this was hit on March 8th, coinciding with that bearish engulfing candle. We see this bullish engulfing candle here. And so that does suggest to me that the bottom could be in. And I also do find it reassuring that from this Fibonacci retracement here, the 2618 extension from that is at a price of $2.86. And it does look like we did get a fake out break below it, open below it, with that bullish engulfing candle and a close above, and we have not retested it. I do think we could retest that level again, $2.86. But this also could be the bottom, and we do have a lot of upside to go to. And if I take a measurement based on the lows that were hit at the end of October with the SPX and the SMH, we can see here that the upside move for SOXS would be approximately 340%. So, I do find that pretty intriguing, but I also do have a number of levels that could be acting as resistance on the way up. So something to consider there. But also, if you wanted to more directly short the SPX, ticker symbol SPXU, which is 3x leveraged short the SPX. And so from this, also going back to those highs that were hit on October 27th, that would represent an upside move of about 100%. And so that really is, the reason why I'm intrigued by SOXS, because rather than a 100% swing here with SPXU, you could be looking at a 340% swing, or you could take profits lower in this trajectory, getting that 100% swing really, with less risk, I would say, than shorting the SPXU for the amount of time that it would take for this to go up. But also, if you wanted to avoid leverage, another way of doing that is with ticker symbol SH, which is not leveraged, and going from the current price of $11.86, going back to those highs that were hit on October 27th, that would be about a 24% swing. So definitely, I do find the SPXU more intriguing, but even more than that, I do find the SOXS to be a very intriguing way to be shorting the market, as I do think not only with semiconductors, but also with the SPX, I do think we are getting to a top, and at some point this year, I do think it will be turning around, and I do think there is money to be made on the downside. But yeah, it might take a little while, perhaps months, before we do really start to see a correction. So it could be a nice time to accumulate some shares of these short ETFs, but it also might be a good idea to just keep an eye on the S&P 500 for more bearish signals, and then it might be good to establish something once we really do start to see some clear confirmation of breakdowns. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.